Which is the best dividend stock to buy right now, Verizon or Visa? I'm going to answer that question in this video looking at these two dividend stocks across four different metrics. So let's get right into it. Starting with the dividend yield. Verizon offers investors a dividend yield of 6.92%, a very robust dividend yield. Meanwhile, Visa gives investors just a 0.7% dividend yield. But remember, when you're investing in a dividend stock, your total return is not just the dividend return, right? Your total return consists of both the dividend and the potential capital gains return. That means the potential for the stock price to increase over time. So just because Verizon offers a much better dividend yield doesn't automatically make Verizon stock the better dividend stock to buy in this case. The next metric I wanted to look at is revenue growth annual going back a decade. And looking at this metric, we can see Visa has been considerably better than Verizon in delivering revenue growth over the last decade. There was only one time when Visa's revenue growth trailed that of Verizon, and that was in the year following the pandemic. Otherwise, Visa has been considerably better, and most recently at 21.59%, nearly 10 times better than that of Verizon. Additionally, Visa provides investors a degree of inflation protection. How does it do that? Well, Visa gains revenue by charging a percentage of all transactions that happen using a card with Visa on it. So if inflation causes folks to spend more money, then that percentage of revenue that Visa will generate will increase just because inflation increased, all else being equal. So in that way, investors in Visa stock get a slight degree of inflation protection when they are buying Visa stock. The next metric I wanted to look at is the operating profit margin over the trailing 12 months. Again, looking back for the previous decade. And this metric is where Visa really shows its domination. A operating profit margin of 66.88%. It's absolutely fantastic. It's nearly 3 times more than Verizon's 22.27%, which in itself is a solid operating profit margin, but Visa makes Verizon look really bad in terms of operating profitability, when in reality, Verizon is solid in terms of a 22% operating profit margin. It's just that's how good Visa is in terms of profitability. In fact, out of all of the companies that I follow, and I follow more than 100 stocks, Visa is the best in terms of this metric, in terms of the operating profit margin, which in my opinion is one of the most important financial metrics to look at when you're evaluating a stock. Finally, I wanted to compare these two dividend stocks on their valuation, and using the forward price to earnings ratio, Visa is trading at a forward PE of 26, while Verizon is trading at a forward PE of 7.69. So which one of these two dividend stocks is the best one to buy right now? I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. I'm going to say Visa is the best dividend stock to buy right now because the potential stock return, the stock price gain over the next several years, is higher than the potential stock price gains for Verizon. So even though Verizon offers a much better dividend yield than Visa, I would still choose Visa as the best dividend stock to buy because what I mentioned earlier in the video, in that your total return includes both the dividend yield and the potential increase in stock price, which I think Visa holds a considerable advantage over Verizon. All right, so that's all I've got for this video. As always, thank you so much for watching. I've hand selected a few of my other videos that I think you will enjoy that are popping up on your screen as I'm speaking. So please click on one of those and I'll see you over there. Thank you again for watching.